Hey, traders, welcome to our Sunday evening show. I am Raghee. This is my report. Great to see everyone. Hope everyone's doing well. Enjoy the weekend. Still plenty of weekend left, but before we wrap it up, we're going to take a look at the markets. We're going to take a look at the economic calendar and get a good idea of what we have coming up for this holiday affected week. And so let's kick it off with the calendar. Couple calendars you can take a look at, and I'll usually end up over here at the Forex Factory calendar. This one is a great look at a global view of the what I like to call hot zones, so scheduled high impact, high volatility events that are going to create sometimes opportunity, but sometimes also risk events that we need to be aware of. Taking a look at Monday, very quiet. I love days like Monday because we don't have any major events scheduled. And this way, and by the way, we have day 3 of the volume decoded live trading going on tomorrow. It's going to be the first live trading we have where we don't have hot zones sort of breathing down our neck. There's a different kind of issue we have this week, and that is as we get closer and closer to the holiday, we're going to see the U.S. Volume and activity and attention start to dry up, but not before on Tuesday we hear from FOMC member Meester, not before we get George, Bullard, and even our, as you can see right here, Richmond Manufacturing Index. Normally, I would not give a rip about a Richmond Manufacturing Index, but considering that there isn't a whole heck of a lot that we'll be looking at other than Fed speaking events, sometimes events that don't necessarily have our usual or typical attention will get a disproportionate amount of attention because we are looking at the very open, nearly blank calendar. So it's the only thing, right? It's not even a choice. It's a lack of options. So we go into Wednesday. Wednesday is going to be interesting because we're going to get a significant amount of data, everything from flash services, PMI. Remember, any PMI, CPI, PCE, these are going to be under the category of inflation, and it will definitely be something we want to keep an eye on. Durable good orders, again, something we'll want to keep an eye on. And we're going to get unemployment claims on Wednesday instead of on Thursday like we normally do. We're going to get a revised University of Michigan sentiment on Wednesday as well. And then, as if that isn't enough, what is this market counting down to? Why might folks stick around for this week, which would considered, kind of a week of low importance until we see that FOMC meeting minutes. So this is the sort of the very curated, prepared statement that will follow up the FOMC meeting. It's supposed to be like being a fly on the wall. Now, clearly, these are far more carefully put together. There used to be a rawness to these things, the dissension, the folks that were not going along with the vote. I don't know if we're going to see that as much, but nonetheless, something to keep an eye on. Of course, bank holiday on Thursday and shortened day on Friday. I mean, the week is going to end with a crescendo on Wednesday, right around 2 p.m. as we get that FOMC meeting minutes. So probably worth sticking around for Wednesday if you want to see how expectations for target rate probabilities are going to shape up. What does that mean? That means what are we expecting the Federal Reserve to say and do in terms of what we are getting as far as data. And there are some interesting data points coming out this week. Another thing to remember is, and we've been doing this in the sector secrets room quite a bit, and that is looking at the Econo Day calendar. Not one that I usually talk about. I do want to mention it here, and that is aside from, not in lieu of, supplementing the Forex Factory calendar. Take a look at the economic calendar on Econo Day, because sometimes Federal Reserve speaking events, different members that are not listed on Trading Economics, that are not listed on Forex Factory, will be listed here. Not always, but it takes just a few moments to take a quick glance at it. And then that way you're well prepared for the week coming up. All right, so let's go ahead and take a look at our questions. If you have any questions, as always, feel free to type them in. Uh, and we'll go from there. If you've been wanting your questions answered, tell you what, gang, I didn't do something today, which is I usually broadcast the link for the show in all the rooms. And I wanted to see what the attendance would be like if I didn't. And I also wanted to think about whether or not going forward, we might not have the show at 6:30 instead of 6. So these are things that I'm open to everyone's feedback on, because after all, this show is for you all. So if you're kind of back there in the background thinking, I usually don't ask questions, there's so many of them. Today's the day. Today's the day to ask, because we're going to have a little bit lighter, a live audience. And I thought I'd see how that would go. So if you've always wanted to ask a question but never did, or maybe I never get around to your question because there's so many others, if you have one today, rare opportunity. Kicking it off with Groot. How are you? 6J. Did complete a minor high. Okay, let's run over to 6J. If you are not familiar with that symbol, 6J, that is the yen. That is the Japanese yen. And this is the Japanese yen versus the US dollar. So even though it doesn't say Japanese yen versus US dollar, that is indeed what we are looking at. And, ultimately, when we do look at the Japanese yen, please remember the fact that this is heading lower is reflective of two things. One, a weakening yen, but more specifically, a weakening yen versus the dollar. So this would be akin to shorting yen, but also being long dollar for those of you who are not clear on how does currency trading work? Is it different? It is different. Is it complicated? Not really. If anyone's flown internationally, who here has flown out of, say, LaGuardia into, wherever you landed in Charles de Gaulle, you landed in, wherever, right? If you have done that and then you converted US dollars to euro or to pound or whatever it may be, you have essentially put on one half of a Forex trade in many ways, because you're exchanging one currency for the other. And that is always how currency is considered to be transacted when we are trading it as well. It's always one currency against the other. So I thought we'd dive into a little bit more of that, because I would love everyone to be very fluent in currencies, because it helps us understand what's going on at the central bank level. All right. That being said, is there a minor high? There is, and we can look at the short side. But remember, if you're looking to short yen, that means we're still expecting higher highs in equities, because that's one of the reasons the yen moves lower. It's sold or borrowed to basically fund the purchase of what we would expect to be higher yielding assets. And normally those higher yielding assets are equities or stocks. So we would expect not only yen to weaken because equities are stronger, we would expect yen to weaken because dollar is also stronger. So there's a couple moving pieces. And do I think that dollar is going to move higher? Am I expecting the dollar to move higher? I am. I am bullish dollar, and we are setting up a long position in dollar. So all my cards on the table, I'm looking to be long the greenback. And then if I can be short the yen, or by the way, my friend, even the euro, I love being able to dive into this a little bit deeper, because currencies are one of those markets that a lot of folks are not necessarily super fluent in. And I bring in the dollar, and Trader Momo, yeah, you mentioned the dollar index. Yeah, Mike, you mentioned the dollar index. Love it. Love it. Let me deep dive the dollar just a little bit here. The dollar is always a basket. It's a high concentration weighted basket. There's 6 currencies in the dollar. However, the first 3, if you think about it, 3 of those currencies are actually your most heavily weighted, most influential on which way the dollar index basket is going to move. Euro, yen, and pound in that order. So if the dollar is going to move higher, let's say you're looking at the DX contract of the dollar, this is the dollar gaining for the most part against the euro, the yen, and the pound. If I'm looking at the euro itself, this is the easiest way to look at the dollar without having the dollar index futures contract, which is fairly cost prohibitive to get because it's on the ICE exchange versus here on the CME. If the dollar is moving higher, euro is going to move lower. And we are looking at potentially a short euro trade up off against the anchored VWAP and the 200 exponential propulsion. So we are looking at that. So if it's always one currency against another, what is the dollar? So the dollar is the only exception. Is it's going to always be one currency against another, at least. The dollar is the only exception, Trader Momo. The dollar, again, is the dollar basket. So this is UUP. This is DXY. This is DX futures. It's the US dollar versus the euro, the yen, and the pound. So all three of those are in place, but it's always one currency against another at minimum. The case of the dollar. And, really, when we talk about the dollar, if you really want to get down to it, it really is the dollar versus the euro. The euro is almost 58% weighting. So that one currency is over half the weighting of this basket of 6 currencies. So in many ways, you might say, Rog, yeah, it kind of is just that one. So I hope that dollar breakdown makes sense. The dollar always has to gain on those 3 to continue to move higher. Or, if you're looking to short the dollar, you better see a strong euro first and foremost, followed by at least a stable, if not strong yen, and or a stable, if not strong pound, right? We look at all 3 of those. Okay, cool. So that covers our question on 6J. I would like to get short 6J, but I showed you, Groot, what else has to cooperate. Mike answered, will the dollar ever go lower? So Mike, now you know, for the dollar to go lower, euro has to strengthen first and foremost, and yen and pound. And then that strength in those 3 currencies would then have to impact the US dollar index. Or if you want to go UUP, we would have to see a breakdown through the anchored VWAP and or 200 exponential propulsion. That's the way I look at the exponential moving average, by the way. And so, yes, it will eventually, but not until euro strengthens. And that's where a lot of traders get the timing or the understanding wrong. The best way to trade the dollar, gang, the best way is, if you want to be short dollars, find a great setup that's long euro, because one without the other is likely not going to follow through. And if you want to be, say, like to stick with long dollar, find a great short euro position. So if you don't have sort of the pair of those working at the same time, I've got a dollar buy and I've got a euro short, you might find yourself a little frustrated with the follow through. So eventually we might, but not until that euro weakens, Mike. That's going to be a big one. That's going to be a big one. All right. And the other US dollar question, just to kind of tackle all that at once, was, there we go. So that was Trader Momo's question. So I hope that little breakdown of the dollar, I know I kind of went deep diving in that, but it's such a misunderstood currency, and it's such a misunderstood way of trading, because folks think they're actually trading the dollar when in reality it's not that really at all. So I hope that makes sense. All right, next up is when I went long SPY in July. What was the trigger for the entry? So in July, I sent out that video, the light at the end of the bottom, and that was July 7. And I went long on the, so basically what I wanted to do is wait for the pattern and volume to help me out. I went long July 15th. So I got long July 15th. That was a day that wasn't ideal. Frankly, it wasn't ideal because of the gap, but that was when the pattern completed. Yeah. All right. Next up is, I was asking earlier if 6:30 might be a better time for the Raghee report. I know some people might be having dinner or whatnot. So I was just thinking, my sister was in town, and I literally rushed out, got dinner, and then sat down. I said, maybe there's some other folks who are having similar scheduling issues. I know we get a lot of folks watching the Raghee report replay, but I was just thinking who would have an easier time for 6:30 versus 6. So when I'm in Charts and Coffee tomorrow and maybe you need a little bit to think about it, yeah, let me know. Maybe we'll test out that 6:30 Eastern start time, 30 minutes later than we usually do, and see how we do with that. All right. Okay, cool. I appreciate that. I appreciate that. Thank you. Next up is, does Simpler Trading teach how to trade futures? Donald, yes, yes. There's a handful of us that trade futures, and it just depends on what style you would like to trade. I would say that, if you want to be a day trader, if you want to day trade and you want to day trade in the style that I teach, I do that Monday through Friday in the Sector Secrets Mastery. So you're thinking, Rog, yeah, I've heard you talking about this first hour of the day approach. If you want to learn how to use the hourly price movement ranges, the HPMR indicator, etc. If you want to trade with me with that style, then the Sector Secrets Mastery would be the best place to learn how to do that. If you want a more broad understanding of futures from a larger roster of traders, traders that are looking long-term, short-term, different types of tools, if you want a little bit more of a cast a wider net into trying to figure out maybe how you want to trade futures. You want exposure to a lot of different traders until you figure out what you want. That's where Simpler Futures, it's great because we have, let's see, myself, 1, 2, 3, 4, 5 of us in that room. There's 5 of us in the Simpler Futures room. Did I not count myself? Yeah, there's 5 of us in that room. And so it just depends on how you want to do it, Donald, right? If you want a little bit more concentrated view of the way I do things, or if you want a wider lens from which to understand how lots of different traders look at the futures market, or maybe check them both out. All right. Okay. So Lorna's saying, yes, 5. Yeah, I was counting in my head. Once upon a time, it was just the 3 of us. It was just 3 of us in the futures room. And it wasn't all that long ago. But yeah, we have 5 different traders in the room. Or again, the Sector Secrets Mastery, where I teach folks how to trade futures as well. All right. Next up is, and you can find Sector Secrets Mastery at sectorsecrets.com. All right. Generally speaking, what does volume look like during this holiday week? Mr. Walker, we have an FOMC, so this is going to be a little weird because there's a reason for folks to stick around, at least on Wednesday, because there's a lot of data coming out Wednesday. But normally it's very sporadic. It comes in and out. The hot zones are going to be the concentrated attention, concentrated volume moments for this week's equities movement. But normally, it's very light. And light means there's fewer eyes in the market, less of that broader opinion. And it also means that we are not going to be expecting as much, I would say, meaningful movement. And what does that mean, meaningful? What's the involvement? Whose opinion are we trading? Is it broad-based opinion, or is a smaller group of traders where once the traders come back from the holiday, we're going to see that volume and that opinion hit the market and maybe upend the lower volume, lower participation trading that occurred this week. So it's usually very, very, very light. I try not to make any significant decisions on a week like this unless I was already looking for setups, from last week, which we have dollar long, euro short. We're looking at gold. There's a number of markets we're really interested in. We set up a lot of those last week. So my volume decoded folks in the live trading, we sent out, 4 or 5 setups for the swing trades last week. And then tomorrow we're going to day trade, which I'm really looking forward to. So I'll have to be careful, Mr. Walker, about that lower volume tomorrow and see if maybe there's a little bit of, apathy as people are starting to phone it in this week. So we'll see. And we can know this because some of you probably already know when we are looking at volume, we need to look at it from a relative perspective. That was one of the tools that was included with the volume decoded class, which is, what do we normally see in terms of volume? What has been the normal volume the last 30 days, 14 days, 7 days? And where are we by a percentage within that move? What is that number? Where are we as a percentage or as the actual read? And that's really helpful for us because if we're not seeing volume start to tick up in a way that would mean we're going to see what we typically see by volume, the number of contracts that are being shared, gives us a good idea that not as many eyes are on the market. So thank you for that. All right, next up is, let's see here. And thank you, thank you. I appreciate that, Stacy. Hit the like button. I appreciate that. Thank you very much. All right. Questions. All right. Hey there, Sue. B, K, and G, sure, has been volatile and acting independent. Where do I think this is going? So Booking has weighting in a number of places. So you always want to know what sectors the weighting is in. But Booking continues to have, take a look here. Let me grab my drawing tools. Booking continues to have a tremendous amount of resistance sitting at the mean. It doesn't always have to be the mean. It just happens to be the mean here. It has a lot of resistance at the mean of the V-score. So every time we get there, take a look. Right? And if you know what to look for here, the price pattern, the volume pattern, and the structure of the market, which I know a lot of you do now because you just took the volume decoded class, this should look very, very familiar for a potential what? Short setup. Do I think this is bullish yet? I would not get bullish in Booking until it's north of the 200 and the anchored VWAP. So figure north of 2060. In the meanwhile, we can see here the fades continue to be pretty consistent around the 0 of the V-score, the mean, and then as we get closer to the +1. So even if we clear the 0 right around, I'd say 0.5, this looks to be about 0.2 standard deviations, we're running into resistance, volume-based resistance. So I would say it's probably going to continue to struggle and only break out once those key levels are broken. So I would look to the downside after a rejection at those levels. Okay. All right. Tim asks, when a minor high or low posts on the futures chart, but not the ETF, do I follow the futures over the ETF? Tim, absolutely. Yes, I do follow the futures. In fact, the only reason, so that's a great question. So the question is this, Rog, I want to trade the SPY, cool, or even the SPX. And the question then becomes, how do I do it? I'm going to watch the ES because remember, the ES is a nearly 24-hour view of what's happening on the S&P 500 through the futures contract. The SPY is only 9:30 to 4. I want that fuller, more complete view. The only reason I'm interested in the SPY is at some point I got to figure out what strike is either at or slightly in the money when my trigger is forming. So that will allow me to pull up on my platform, whatever platform I'm using, the option chain on SPY and take a look at the strikes or where the liquidity is. And then at that point, I'm done with the SPY. I don't need it anymore because the ES futures contract is going to tell me what micro futures are going to do, SPX is going to do, SPY is going to do, because the structure on ES is far more indicative of sort of a global opinion of what's happening in the markets. So it's indicative of what's happening in the S&P through the Asian session, through the European session, the UK, the US, and all over again. And I like that more complete view. Okay. So real simply, do I follow the futures over the ETF? 100%. But that doesn't mean we can't trade the ETF, and what we often do. Are we nearing a setup on FXC? So this is a currency share of the Canadian dollar. So Tim, if I'm going to set up the Canadian dollar, I'm going to head on over to 6C before I start trading FXC. And I don't really have a lot here that's catching my attention. Would I rather be short? Yes. Short means I want to be short the Canadian dollar while buying the US dollar. That's what this contract here is allowing us to express opinion on. So do I have a bearish opinion of the Canadian dollar and simultaneously a neutral or bullish opinion of the US dollar? And if that is yes to both, then I have a potential setup to the short side in the Canadian dollar. I don't have a buy yet because I'd have to be near a lower end of the range. And this is not a trend yet. This is a lot of bullish momentum within an overall neutral market trend. So I don't have one yet. Yeah, I really don't have one yet, William. So thank you for the question. Not really brewing as of this moment. All right, next up is how do I use the CCI in my trading? I use it mostly for trend reversals, Tim. Yeah, normally I use a 20 period CCI and I use it for trend reversals. I also like to use it sometimes to confirm 1, 2, 3. So for those of you that don't know what a 1, 2, 3 pattern is, a classic Charles Dow pattern. If you go to Google and look up Countdown Trader, Dow, DOW 1, 2, 3, just Google that. You can see here your top results are taking you right to my Countdown Trader blog. All right. If you don't know what Dow theory is, you don't need this one to understand the 1, 2, 3 continuation reversal, right? But all of these are going to help you, and they're all at Countdown Trader. So just do a quick Google search, and then you'll get these hits. Now, once you understand what a Dow 1, 2, 3 is, very old pattern, one of my favorites, traded hundreds of these things, then you can start to look at how the CCI lends itself to what amounts to a trend reversal, which is what the Dow 1, 2, 3 reversal allows you to do. So pretty cool stuff. All right, next up. Hey there, Patrick. Appreciate your commitment to the daily pre-market videos. You know, Patrick, I'm looking at the market anyway, so I'm just quite literally color commentating myself, right? I'm looking at the market, talking about what I see, and then you all ask questions. Oftentimes they're questions that I have as well. So it's just a great way for me to sort of get warmed up. I know it's a great way for a lot of you to do that. So I appreciate that, Patrick. That is really kind to you. And I thank you all for showing up and spending your time watching the video, watching the replay, or watching it live, and joining our Caffeinate and Dominate gang. So thank you very much. As far as our Sundays, so it looks like quite a few folks are thinking 6:30. Yeah, maybe we'll try 6:30 and see how that goes. No, I appreciate that. Some of you, I'm sure, like 6. I'm just trying to find a good time for a show. We can have the most number of people live, which also always makes for great energy. All right, next up is when looking at the rate increase probabilities on the CME page, I get confused at why to go to certain months, look at February and May. I look at May and I look at December. May and December are my preferences. December because where are we going to end, and May right now because that looks like where we're going to peak and plateau, or that's where the terminal rate seems to be the clearest. You know, what's the highest rate they're going to take us to and stop? That's that terminal rate. So keep an eye on December, which really isn't even that important anymore. But I would say definitely keep an eye on May, and that's where we peak and plateau. All right, can we take a look at natural gas? Would it be seasonally bullish this year? No, it's absolutely not seasonally bullish this year. I mean, this time of year. No, not until early next year. No, not until early next year. Yeah, so I keep an eye on that. In terms of if we have any kind of upgrades in heating degree days or weather, that kind of thing, at that point, we might see a little bit of a quick burst to the upside, but I wouldn't expect trends. Not yet. The trend for winter time starts in June, July. It peaks around October, November, because we know winter's coming. To what degree, we don't know, but we start to run it up well in advance of this seasonal demand. Yeah. All right, gang, as always, thank you so much for joining me for our weekly Sunday report, taking a look at how the markets are open. I know a lot of folks are wondering, are you a little bearish going into this week, Rog? Just a little bit, because we don't have a trend, and we're sitting up near the highs of the range. So I'm a little bit bearish in equities going into this week, which is not to say I'm expecting brand new lows, not to say I'm expecting dramatically lower lows, but I'm simply expecting an overbought market to maybe pull back a little bit and retrace. All right, gang, as always, thank you so much for joining me for our weekly report. And thanks for the questions. I'll see you tomorrow for Charts and Coffee. All right, be good to each other, gang.